In March, we laid out the strategy. We said that this year would be about arresting the decline of revenue that the business had historically seen, and we reported 7% growth in revenue, 1% reduction in expenses, and a 52% growth in earnings. So the near-term goal of arresting the decline was delivered, and we also said that would translate into a more efficient business. And we improved our efficiency from 85 to 79% in the half. Now it's a half year. We're focused on the full year, and we are focused on really delivering a strategy that's sustainable. So what I think is more important than even the fact that these numbers are good and we feel very good about them was the fact that we completed our conversion to a single tech infrastructure. That means that all of our investors are now operating, all our fund managers are operating on a single tech infrastructure. That brings focus and better execution for delivering the performance that we are in the business of doing for our clients.
Just to focus on some specific numbers, the market was looking at a net outflow number, I think, of around 2.1 billion. You've given us 1.9 billion here, obviously, which is an improvement, but it is still a net outflow. When does this stop?
Well, there are three. We got very close to growth, as you can see. We got within under 2 billion of outflow and 535 billion of AUA. So we got very, very close, and that's the best performance since the merger of these companies. So we certainly feel good about the direction of travel. But I outlined when we were last chatting that we've got three businesses. We've got a global asset manager and investments business. We have an advisor business for UK savings and wealth, and a personal business addressing the needs of the UK savings and wealth market. Both of the advisor business and the personal business both had asset growth and earnings growth. So the core biggest business, of course, which we reported just under 2 billion, our objective is to get that business to growth as well. And that's why we've been taking these other actions of investing in Asia, appointing a new CEO in Asia, and Rennie Buhlmann. Rennie's 4 months into his job, and we're already seeing positive signs there. And our private markets business, which we said we would grow, we had 10 times the rate of deal flow in our private markets business in the first half at 3.2 billion. You'll also notice that our margin went up. And that's because when you invest in wholesale and you invest in private markets, you get better margin. And that's the strategy of the business, because our clients asked us to find, for example, get us out of old real estate and get us into new modern real estate. We acquired Tritax, and we talked about that last time. And Tritax just last week reported their earnings, which are record earnings and record asset growth. So the actions that we're taking to structurally improve the business, placing it in the right areas of high exogenous growth, are bearing fruit, and they're showing up in the numbers.
Stephen, as we talk about institutional and wholesale flow, I think it's fair to make the point that we all know this is not a normal market. We've had so many pandemic trends, which has caused extreme volatility in markets, and you've had a lot of investors trying to park cash where they can in high-yielding parts of the market or high-growth areas. Where do you see this going, though, over the next 12 months? Because the environment has the ability potentially to continue on like this or even self-correct back to some form of normal. What are your predictions on what we may see?
Well, great question, Karen, and that's exactly, we're reporting these results in a half year that has seen a recovery from a pandemic, but we're seeing, very supportive monetary and fiscal conditions. We think they're going to continue. We've seen record earnings. I mean, it's been a record earnings season, phenomenal earnings, so that's also been supportive. We saw a bond market wobble as on the reflation trade, but that's abating now. We saw the Fed be very hawkish and then moderate their tone. We think that all indicates that although we're going to see a continued improving environment as vaccines, as the laggards catch up with the leaders in terms of vaccine distribution, we think the environment will be supportive. The Delta variant has taken a little bit of the upside risk away that we originally had spoken of in terms of the market environment, because obviously it's proving difficult to handle. But we think what we've lived through, which is a volatile environment, is typical of a recovery. It's going to be a fairly long recovery, and we think that's supportive for investors if you're actively investing in the right places.